The Philippine Stock Exchange is a psychological meat grinder. When the PSEi violently breaks below the critical 6,000 support level, the retail reaction is immediate, visceral panic. Look closely at this first Metrosec terminal snapshot. The dial sits deep in the red at 5,989 pesos. The portfolio holds a negative 8.23% unrealized loss, bleeding over 111,000 pesos. For an average investor, this dashboard is a death sentence. But this chart tells a different story. While the top-line index collapses, the master ledger has engineered a 2.52. The operator initiates the ALSA protocol. While retail investors blindly dump assets, the protocol triggers a dividend siphon, passively extracting cash from heavy blue-chip fortresses. This data visualization maps the exact flow of those extractions during the Q1 crash. The ledger pulled exactly 4,410 pesos from Metrobank and another 5,944 pesos directly from ICT, routing every cent into a central vault. That newly siphoned cash doesn't sit idle. It is immediately deployed back into the market to acquire Universal Robina and PLDT. Because of the widespread panic, these assets are secured at massive 38% discounts. This is the anatomy of an alpha maneuver. It takes absolute discipline to buy into the fear of others and accumulate permanent utility anchors while the rest of the market is liquidating. Offense alone won't survive a bear market. The defensive protocol demands the emotionless amputation of dead weight. Cyclical traps like NIKL Asia and All Home were aggressively liquidated. The positions were severed to unfreeze trapped capital. An amateur investor paralyzes themselves holding a 50% loss, hoping for a macro headwind to reverse. The operator accepts the exact numerical damage, cuts the line, and rotates. In a bleeding market, forced immediate liquidity holds infinitely more value than the blind hope of a recovery. The capital freed from those amputations is reloaded directly into the vault, ready to fund surgical, high-conviction rates. This chart tracks the most aggressive of those rates, a highly concentrated strike on Apex mining. During a brief Q1 commodity spike, the operator extracted a precise 12,000 peso realized profit, towering over the standard microtrans trades. This dividend notice confirms a secondary strike on DigiPlus. Look at the isolated fields, a strict 2,763 peso extraction from Code Plus. Zooming out reveals true precision. The ex-date is March 31, 2026. The position was held strictly to siphon the yield before rotating the capital. These calculated micro-extractions compound over time. They build the exact mathematical cushion required to offset the heavy macro bleeding dragging down the broader portfolio. Despite the sustained damage across the broader Philippine index, the master ledger finishes the quarter standing strong. Total portfolio equity is locked at over 1.22 million pesos. The core operating philosophy driving this result is simple. Cash is a loaded weapon. Look at this physical reserve of Philippine pesos. This represents the operator's vault. Even after heavy accumulation during the 6,000 level collapse, the ledger retains over 86,000 pesos in pure dry powder, waiting for the next structural failure. Retail psychology demands being fully invested at all times, chasing green candles until liquidity runs dry. The operator's discipline forces them to hold live ammunition in reserve. In a brutal bear market, walking away with a 2.5% yield is a statistical anomaly. To survive the psychological warfare of the PSE, investors must strip away emotional reactions and submit to the cold execution of a blackout ledger.